Come here, I'll give you free signals. So there is a danger getting a signal in that way, or getting education in that way. Imagine I'm having a $200,000 account. I'm a rich guy. After having breached even funded accounts, I noticed that even up to now, if I log in back to that platform, that money is just sitting there. It's good money for me, but it's not money for them. They never withdrew any blown funded account. Never. They don't withdraw. They just leave it there because it's not real money. I want to take the money of the losers. I wouldn't say rely much on prop firms because they are not reliable. And the rule that I would give you, which is a very strict rule, every time you are eligible for a withdrawal, withdraw your profits as soon as possible. Hello, good morning, good afternoon, good evening, depending on where you are watching this video from. All right, we are yet once again at this point or juncture of life where we educate each other, teach each other of what we know and share what we know and understand. So today you are going to learn with me how to pass a prop firm challenge, how to trade a prop firm and proceed, the advantages, the disadvantages throughout this video. So what you want to do is to sit back, relax, and allow this video or this tutorial to help you throughout the prop firm challenging. I want you to understand one thing. I am a trader myself, and I've been trading for quite some years now. But in the process of being a trader for years, there are still struggles that I personally face. And then these struggles that I personally face sometimes is lost accounts, blown accounts, and so forth. This is a battle that each and every one of us is going to continuously face. This is something that you are going to understand that it's part of the journey. Even those that have got multiple assets, multiple money, or as much as you can think of, they still get liquidated. But there's something that makes these people different from each and every one of us. Point number one is the comparison. What I've noticed when it comes to trading, there's a bit of a competition. And it's funny because you started very well, you never thought of competing with anybody. But as time goes on, there is a bit of a psychological effect to say, I am better or best than somebody. You see, that's a very dangerous zone to find yourself in as a trader. If you are to find yourself in a position where you are competing with others, sometimes you can even reach a point where you just compete with people with best results that you just saw on internet. You understand? You by default want to do better than them. They don't even know you. They don't know where you stay. They don't even know your financial status. They don't even know your challenges in life. But all of a sudden you engage in competition with these traders. You want to take big positions. You want to take high risk positions because you want to be better than somebody whom you saw on internet. So as we move forward on this video, you want to learn these things and you want to hear them from me so that you can avoid them as you move forward. What we are going to do today, we are going to be covering one of the most requested topics in trading, which is how to pass prop firms consistently. Not just once, not through gambling, not through luck, but consistency. And this is something that I want you to understand and learn as we move forward, that trading is a very, very deeper dimension that you engage yourself in. Most traders do not fail prop firms because they lack a strategy. They fail because they lack discipline. That's one thing that you want to understand. That's most of the things that affect most traders. They fail because they cannot control themselves. By the end of this video, you understand why passing a prop firm is actually easier than the most traders make it seem. You are going to understand that trading prop firms is easier than you can ever imagine. But before we go forward, do you know what is a prop firm? We start there. Or you only hear about prop firm? That's one thing that we need to look into. You want to understand the real game. You want to understand the prop firms. You want to know what is a prop firm and how does a prop firm work. Have you made your own research, or you just heard somebody saying they are a prop firm trader, then you also jumped in and started to trade prop firms? Do you understand what you are involving yourself in or with? For me, I started trading in 2017. When I started trading in 2017, there is something that I didn't understand, which was the broker itself. I didn't understand how a broker works. I didn't even understand the back end of the business in the brokerage space. All I cared for was to deposit the little that I had and open a trade. Whether it wins or loses, as long as I'm able to take care of my bills, that's all I cared for. I didn't care to want to make my own research about brokers. What is a broker? How does a broker operate? And so forth, which is one of the most dangerous things to do, is to engage in something you don't understand. It is to engage in a business you have not done a proper research on. You are wondering why I'm talking about a broker at the same time this video is about prop firms. But I'm taking you back from where I started from to where I am right now, just for you to be educated. One mistake that most people do, or I did, was to jump in something that I did not know. I didn't care much about the back end to understand the business itself, what involves trading. So after having gone through my own personal research and finding the findings that I did find, I became a better trader. I would advise you, whether you are a prop firm trader or you are a live fund brokerage trader, I would advise you to research what does it take for one to run a broker. That's where we start from. The same broker that is providing you a service, what does it take to run it? What is involved in your funds? What is involved in the platform? What is needed? How much are they spending to run these platforms for you or for us as traders? You want to understand that business side of it. I promise you, once you discover the truth about brokers, then you are going to position yourself in a better position to be a better trader. For example, I would sit here today and start to criticize other individuals, how they trade, how they don't know how to trade, this and that and that and that. Some of them, how they are running mentorship programs, this and that and that. Then still within that video that I am making about someone or other businesses, I am still promoting myself or my broker. It's just like coming to you, telling you that broker X is better than broker B. Broker B does this and that wrong, and this broker X will provide this for you. If you look into the internet space, this space is polluted by those kind of videos. This one criticizes this one criticizes this one criticizes this one. But the thing there is, the person who is watching those people is the business target. They are literally doing those videos so that you can click their links so that you get registered. And then as soon as you get registered, they earn commission from your activities within that broker that they referred you to. Just like a person coming to you to say, we don't charge for signals, we don't charge for mentorship, everything about us is for free. There's nothing like that, my brother. Anything that is for free out there, just know that you are the product, you are the business. Anybody offering any free service, there is always something for them. And that thing that is something for them is a hidden thing that you can never know. If you are to know it, then they've lost business. So they will keep you in the loop so that you can continue in the radar of making them an income. So they would portray themselves to be better people than others so that you can follow them. When you follow them, you are the one to make them an income. Well, this video is not driven to literally show you that other people are bad people. This video is literally driven by opening your eyes. My desire is that by the end of this video, you have learned things that are important, that when you are approaching trading, you approach it in a smart way so that you don't become the fish that is caught. I want you to picture the industry of trading as an industry like a sea. You know, a sea, everyone is throwing a fishing hook or rope. There is a worm that is within that fishing hook. There are fish which are big fish inside the sea that were never caught. They know, they have seen that one fish would jump into this worm and then it goes up and never came back. The fish has seen other fishes coming out of the sea and never returning. So the fish, what it does, it only moves behind while others are running and rushing towards a worm that is being thrown inside the water. Once it's caught, there is those, while it's fighting for its life, there is those worm that will split its mouth. Then the fish will be going to collect those for free because the danger is no longer there. So you don't want to be that fish who is caught in the loop of being misled and misinformed. Then there's another guy, another fish who keeps eating from your misery. Do you get my point? For example, we will talk about the prop firm space. Or before we go to the prop firm space, let's look into the brokerage space. Brokers are earning from your commissions. Well, you don't have access to the financial markets. That's what you should accept. They have to charge you commissions. They have to charge you swap fees. They have to charge you that. They have to charge you that because they are providing you with that platform that you do not have access to. Particularly because you cannot afford the platform. At the same time, you do not make your own research on how to have your own platform. Do you get my point? So these are things that you are paying for. You are paying for not knowing, and also you are paying for not affording a trading platform that then links you to the liquidity providers. So a broker has to charge you. Then there's a guy who is misinforming you by saying he doesn't give things at a price. He doesn't make money out of people. Then at the end of his video, he will say, click this link to register. Come here, I'll give you free signals. When you get to the group of free signals, you say register through this link and deposit 700 Rand or more. You see, the catch was, I don't sell anything. Everything is for free. Then when you got there, they make you pay for that. So there is a danger getting a signal in that way or getting education in that way. Though the education is not paid for, it is likely going to be garbage. You're not going to learn the real trading part. You're going to pick what they picked on the internet for free and give it to you because it's a free knowledge. The truth is, what you think is the real knowledge is really not the real knowledge when it comes to trading. Let's move on. So you see, you were the fish that was caught by an individual who says, come here for free. Now, when you get there, this individual is like a broker. He's called introducing broker. Him being an introducing broker means you are going to make him commission by your activities. Whether you win or lose, this IB is earning from your activities. Fast forward, you don't have good skill. You don't have enough money to trade. At the same time, you are being charged by two entities, the introducing broker plus the broker itself. They are literally sharing your commission or whatever you do within their platform. So you are being charged by these two guys, charged by the IB, charged by the broker at the same time. And then you are going to face market conditions. You see, survival there becomes hard and difficult. You see, it becomes not easy for you to even make a living. I have seen people in my region giving up in trading because they have lost so much money. But this money is compiled in small deposit. You deposit small, you deposit small, you deposit small. up until you reach a point where you are exhausted, which is the reality of it. Trading requires capital, and a lot of capital at the end of the day. One of the most challenging things in your trading journey is likely going to be capital. We have partnered with Commit Capital to help traders in their journey. I have worked with Commit Capital. I have been funded with Commit Capital. I have received various payouts from Commit Capital. Therefore, it's safe to literally recommend you to jump into Commit Capital. Commit Capital is a prop firm that helps traders with funding, unleash your trading potential, expand your funded account to an impressive 1 million US dollar, take your trading to the next level, right? 8 hours, quick and reliable payouts, right? Maximize your earnings, 85%. You can go up to $1 million with Commit Capital. All right, secure funding in 3 simple steps. Kickstart your trading career with Commit Capital by following these easy 3 steps. Accept the challenge, complete the verification, trade with real capital. Basically, that's how it goes. Commit Capital is partnered with 2 regulated brokers, which is RCG Markets and Space Markets, right? Right, Commit Capital offers instant funding accounts up to $2,500, not that much though, and also 50,000 rands. Commit Capital funds in 2 currencies, rands, which is the South African rands, South African currency, and US dollar, the US dollar, right? They have got instant funding, 1 phase challenge, up to $200,000, up to 4 million rands. They've got 2 phase, which is up from 25,000 rands up to 4 million rands, from 1,250 to 200,000. They've got also classic 2 phase all the way to 200,000 and also 4 million rand capital. Right, you want to use the code BFI30 for a 30% discount on all Commit Capital challenges. BFI30 gives you 30% discount. Right, if you want to learn more about prop firm trading, you want to stick to this YouTube channel. It will help you, guide you also on how to pass these prop firm challenges. Well, skill comes in, but at the same time, you should have a backup in case things don't go well. Someone will say, if you say trading requires capital, then you don't have enough skill. That's not true entirely. No matter how much you can be of a risk manager or guy who is very careful in trading, you are going to eventually hit those stop losses every day because they are orders. You set a stop loss today, you lose. By the time the year ends, check how many stop orders were hit. You will see that you are on the down. So this industry requires you to approach it with an open eye. Go into this industry with the proper research first before you jump in there yourself. The broker side and the prop firm side. This is the same, almost the same. Almost the same. Right, let's jump into today's main talk, which is the prop firm. I have also made my own research. I have also put through together a team. Number of times I have done interviews with the prop firm owners and those who run business of prop firm, such as the tech providers. When we talk of tech providers, there is a company that is paid entirely by a prop firm just to run and automate their systems. The automation system, the payment system, this and that and that. There are those guys who literally provide that. There is also a risk management team that is also paid just to manage the risk of the prop firm. But when I did my own research, at first when prop firms were introduced to me in 2023, I thought this is a jackpot. I literally thought that this is money now coming in. Imagine I'm having a $200,000 account. I'm a rich guy. Do you get my point? Out of that excitement, I went in, bought big accounts, $200,000. I'm very excited, made some good progress. But there's something that I didn't understand. That literally I'm trading on simulated funds, which is almost like a demo account. So the real money was my money, not the firm's money. That's what I didn't understand. But because when that dream was sold to me, it was sold to me as if they are funding me with real money. So when I bought the account, I was blinded to the fact that I'm literally trading the 5% of that account. All these things were just ignored by me, and I learned it the hard way. I breached them 5%. I started to worry a lot. What's wrong? Then I understood that I need to understand what I'm doing before I do it. So I made it a point that before I even go into any prop firm, I ask questions, I understand their platform and how they work. It's in terms of restricted rules, restricted, prohibited strategies, and so forth. That's when I noticed that, okay, so trading a prop firm is just like trading the 5% of that account. Number one. Number two, after having breached even funded accounts, I noticed that even up to now, if I log in back to that platform, that money is just sitting there. It's good money for me, but it's not money for them. They never withdrew any blown funded account. Never. They don't withdraw. They just leave it there because it's not real money. What I want to show you is prop firms literally make money out of your losses. That's what I want you to understand. Prop firms make money out of your losses. That means, one, you buy a challenge. You buy a challenge with a fee. That fee is the one that is real money for the prop firm. Their prayer is you must blow that challenge through their rules. So there are prop firms that are running on that. They make money out of lost accounts. Now, how to spot a good prop firm? You spot a good prop firm by the number of people there. The more a prop firm is populated, the more money it has. The less clients a prop firm has, the less money it has. This is what you want to understand. Check their following, check their reviews. If the reviews are the same people, same this, same that, few numbers, it means they have got few money. But let's proceed before you fall into the trap of prop firms. You want to understand the business of a prop firm. So when I made my own research, I noticed that the thing that is a catch there is the money that I pay for the challenge. That's where the money is. So when I approached the prop firm space, is when I learned it the hard way. I was like, okay, I am going in just to defend my money. Number one. Number two, I want to take the money of the losers. The number of people lost means it's equals to the profits that I would have made if I make profit. To get my point. So I went in with the mind to say, I'm going to be the smart guy in this platform. I'm not going to jump in here like any other person, like that fish that is jumping for a worm that just appeared from nowhere, uninformed. So I went in with a smart mind to say, okay, I am not going to be the loser. I want to be the winner. So I break down my strategy. At the same time, the money side of trading also is my strategy. Let's say I have a budget I set aside specifically for that prop firm. If I see a prop firm, I set aside a budget. And that budget is to literally get my target. I have a budget for a target. That means whatever I lose in that firm is nothing compared to what I want to take from that firm. So I go in with a well-calculated move, with a proper structure, proper plan financially. Well, sometimes I want to do one shot, one account, and that's it. The payout will then do more there. So the earlier you understand that prop firms make money out of you, the better you approach them, knowing very well that your money is the one that is at stake. Sometimes you don't really have money. Maybe you borrowed it. Wherever your money comes from, when you are approaching a prop firm, just know that that's the one that is at stake. If you win, you have made it. If you lose, they have won. So there's a battle between you and the prop firm. Listen, if you are a winner, you are the enemy of the prop firm. And if you are a loser, you are the friend of a prop firm. That's what I want you to understand. Their money is in people, and the people are the money, which is quite different from the prop firm. From the broker side. The broker literally earns from your commissions and has got nothing to do with your money. The liquidity provider is the one that suffers maybe the impact of your gains. But it's very rare for liquidity providers to cry foul. Though some liquidity providers have a limit per country, per region, that this region must only get this much. This country must only get this much, not beyond this much. So there are rules to capital, even though within the broker side. You understand these things once you start to make good money and good profits from this industry. That's when you would also understand that having a good broker is a good thing. And also having a good prop firm is also a good thing. Most traders think a prop firm is a profit challenge, which is not. It's a risk management challenge. You understand? Prop firm is not a profit challenge. It's a risk management challenge. The prop firm doesn't care if you can make 20% in one day. They care whether you can protect the capital. Do you get the point? So once you approach the prop firm with that mindset of saying, this is not a profit challenge, this is a risk challenge, risk management challenge. That's what puts you in a better position. For example, buying a $200,000 account. Before we even talk about the buying power of that 200,000, we need to look into what's the limit for that account, which is only 5%. If you take rough trades, it means that 5% is likely going to go. And if you don't manage your risk properly, it means you have blown. So most of these things, you must understand them, that it's not about making the 20%, it's not about making the target. The question is, can you manage that little that you have as a trader? You see, anyone can make money any day for one day. A gambler can double an account, and a casino customer can hit a jackpot. But can they do it consistently? That's what matters. Can they do it repeatedly? Can they continue in that radar of being profitable? You pass a challenge, can you continue on the phase 2? You pass, can you continue on the payout? You got a payout, can you repeat the same amount of payout? That's what matters with the prop firms. So the prop firms business model depends on finding disciplined traders. That's why they create rules such as daily drawdown, maximum drawdown, position sizing limit, and trading consistency rules. But the truth is, they are there to stop you. In your mind, if you are running into a prop firm, just think about the rules that you are set through to face and focus. These rules are literally there to checkmate you. So it's a business model. These rules, you violate one of it, they don't negotiate with you. They don't care. For example, sometimes you can click buy and sell at the same time by mistake. If you tell them it's a mistake, they don't care. You see, they will tell you are hedging, you are doing this, you are doing that, and they close your account. They don't even refund you. You understand? Because when they are setting these rules, they are setting them so that you can lose the money you paid for that account. That's basically how prop firms operate. So these rules are set there for you to lose the money you paid. You understand? Once you understand that this is a risk management challenge, then you are better. You are better off aware than being blind. And some of you, I know you think and approach prop firms as if they are your enemies. No, they are not. Their rules, their platform. If they don't want you in their platform, they can kick you out anytime. They don't care about you. All they care about is their business running smoothly without any hindrances. So if a prop firm is not good for you, you would rather move into the next prop firm. Now we are going to talk about why most traders fail. Most traders fail because of one, overtrading. The market gives one setup, the trader takes 10. You see, that's overtrading. Market gives you one setup and then you take 10. Some, they go to revenge trading. A trader loses one position. Instead of accepting the loss, they immediately try to win it back. Some, they increase lot sizes after losses or win. You get the point? Some traders, they increase lot sizes after win. Some, they increase lot sizes after a loss. The fear after winning, this is another thing that causes traders to also lose. There are people who fear after winning. After making profit, they become scared. There are people who are scared of good money. So they panic and they want to come out and close that platform. But you want to understand the kind of business that you are involved in. Trading can make you very rich, at the same time can make you very poor. When you make money, this is what you signed in for. You cannot panic over the huge numbers. I've seen people who panic because they've made big money in a day. Close. No, come on. Whereas that was a potential trade that could have changed their lives forever. I want to tell you something. I have taken my time and researched very deep in this industry. The people who make money are very aggressive people. They open big sizes for small movements. They don't care about the whole day movement. All they care about is accuracy and big volume. They push massive volume, 1, 2, 3, 4 candles, they are out. They call it a day. Meanwhile, there are others who are still chasing a whole day movement. So when it comes to prop firm space, you want to follow the rules of a prop firm and make sure that when you have followed the rules of a prop firm, they've got nothing to hold against you. Prop firms don't allow account management, particularly because they want the people purchasing their accounts to be the ones trading, right? Once a prop firm discovers that there's somebody managing your accounts on your behalf, they close you out. Because the businesses, they're dealing with you. They don't care about the third party. But once they discover that there's a third party involved, they close you out. And there are some prop firms that have got technology that detects multiple logins in their platforms. If you log in Nigeria while you signed up as if you are staying in Zimbabwe, they block you. You log in South Africa while you signed in as if you are staying in Lesotho, they block you. So these are the things that you need to understand. So while we move forward, the advice that I would give each and every individual watching this video will be, before you do anything, you want to make proper research and ask questions. That's why when you go into each and every prop firm platform, they have got what we call frequently asked questions. That section is very, very important. If you do not go through that section, when you click withdrawal, the day you click withdrawal, you are going to find it the hard way. They will go and select one rule that they put there. My friend, these people have got a serious back-end office that detects, especially when you are withdrawing big money, they go through each and every trade of yours. They check the time, how many minutes you spend while you are running that trade, each and every, until they approve your payout. And for them to approve your payout is when they have thoroughly seen that this guy did not violate any rules that we have set through there. Now, the red flag of a prop firm is that one that always introduces new rules. Every week there is a new rule. Every month there is a new rule. Every year there is a new rule. You must run away from that prop firm. You want to see a consistent, one-sided or one strict rule that has always been there for a long time, not introducing rules after rules. Particularly from my experience or what I have seen with this industry is these prop firms look into the behaviors of traders that are profitable. They interview them. They even take the script of their strategies. They take everything that trader who won in their platform or who is profitable in their prop firm. Once they have reviewed the way of trading of that individual, they ban the individual after they've banned the individual, then they block that way of trading. For example, I didn't know that there's what we call martingale. Martingale is a strategy. For example, your bias, your daily bias is buy. You are positive, but there's a bit of a drawdown on your trade before going up, right? Maybe you entered, the market went down. You enter a position bigger than your first position. That is martingale. But some prop firms say martingale is when you enter positions below your entry, which is not true. Martingale is increasing the size of your first trade. If I entered a one lot in my first trade, then I go to 1.50. That's martingale. Then on the next trade, I go to 2 lot. That is martingale. Because most of the times when I go, the bigger I go downside there, when I go back to my first initial entry, that could be take profit because those lower positions are bigger than the first one. Then I can close it. I call it a day. That's martingale. So I didn't know about martingale until I was with one prop firm, Alpha Capital Group. They are the ones who said no martingale, not permitted. They refused payout because of that. I learned it the hard way. After learning it, I now understand, okay, martingale is like this. But if I enter same position against my trade or direction, it's not martingale. You see, so the more you go into the prop firm frequently asked questions, that's where you literally understand strategies that work. Because whatever is prohibited there is what works in trading. I hope this makes sense. So whatever they prohibit is the real stuff. So you can literally find strategies through frequently asked questions. Let me leave it like, I mean, you can discover strategies through frequently asked questions. They block what works. Most of the times, if you go there, they block, they might say it's gambling whatsoever, but the real stuff that works is found in the prohibited strategies. I wouldn't say anything much about that, but let's move forward. Now that you have found a good prop firm, you have understood the rules of a prop firm, then stick to their rules. Make sure before you open a trade, you have understood fully their rules so that by the time you click withdrawal, you don't become enemies. All right? And then there's one thing that I think most traders are making as a mistake, or what I've seen mostly on this industry is one denied payout does not mean that prop firm is bad overall. You just violated their rules. So the good part of a prop firm is even if they can block or reject a payout and still allow you to continue in their platform, that's a good prop firm. So next time you do better. Do you get my point? So having denied a payout should be a lesson again to say, okay, I violated the rule here. You also accept that you violated the rule. Then position yourself again for the next one. Do you get my point? The problem is there are prop firms who constantly introduce, every 2 weeks there's a new rule introduced. That's a red flag that you need to run away from. I have myself personally a prop firm that has rejected my payouts before. Only one payout was rejected, but this one payout being rejected does not overall the payouts that I've got from them. So it was their win there. So I wouldn't go around and say they're bad guys. No, it was their win that day as much as it has been my win many times. Do you get my point? And the fact that they have not chased me out of their platform, that's a sign they are good guys. So being denied a payout once by a prop firm that has paid you multiple times doesn't make that prop firm a bad prop firm. And then there are prop firms that I have met myself who I made good money from their platforms. And then the payouts were negotiated to say we'll pay you on monthly basis. Then we'll continue with you after a final payout. The day they paid me the last payout, they literally blocked me out of their platform and never allowed me to trade again. without violating the account, without even opening a position on the account. Out of their own terms, they decided from the contract that they can't keep me in their platform. I wouldn't say they are bad people. It's their business model. I wouldn't go around bad naming them. No. The only thing that I would say is you need to be careful when you're in such platforms. But you have to find it yourself. I can't be advocating against any firm, whereas I desire to run my own firm one of these days. Do you get my point? So I wouldn't be a guy who is bad overall to say these guys are very evil. No, they are not. They are running their own business that way. So being a prop firm trader requires you to be prepared for anything. You understand? But overall, it's a matter of understanding what you are doing, what you are engaging yourself with, and what kind of a company you are engaging yourself with. Now, also approach a prop firm in a way of raising capital so that you can manage live funds from a good broker. I wouldn't say rely much on prop firms because they are not reliable. And the rule that I would give you, which is a very strict rule, every time you are eligible for a withdrawal, withdraw your profits as soon as possible. Every time you are eligible for a withdrawal, please withdraw your profits as soon as possible. These prop firms are not reliable. Anytime they can shut down. So if you have made it, you have arrived at the profit payout, don't even reach a point of saying, I'm not going to take money here. I will grow this account. My friend, the only account that you can want to grow is your live account with a broker, not a prop firm. You can't grow an account with a prop firm. The time you have grown, they can literally shut down the prop firm because you have made a lot of money from one account. They can because they look into their risk management. And this guy has come very well. He has traded very well. He has got nothing. But the thing is, he's trading on a demo account, this guy. And all of a sudden, we can't afford to pay this guy 10 million. The only thing we have to do here is to come up with an excuse and then we shut down the firm. That's it. So every time you are eligible for a withdrawal, make sure you withdraw. Click that withdrawal button as soon as you are eligible for a withdrawal. Do not let your money stay with the prop firm. Rather, let it stay with the broker, not a prop firm. That's not advised. I do not advise that. I hope this makes sense. All right, in conclusion, as we move forward, you see, I think generally the psychology plays a very huge part in trading. For example, let's say I need 6 million. How much prepared am I to lose 1 million? That's what I would ask you. Because you cannot expect a win all the time. If I'm looking for a 6 million, I should be prepared to lose a million. Does that make sense? I should be prepared to lose a million if I need a 6 million. I should be. How prepared am I to sacrifice that million if I'm looking for a 6 million? It's a risk-reward ratio. How much are you willing to risk to get what you want? This is a part that is a bit most difficult to do, which I learned it the hard way myself. As you are a trader, avoid announcing your trades and also avoid showing off your wins. By default, it puts you under pressure. By default, it puts you under pressure and you'll be engaged in a position of having to constantly prove yourself to people. And that can affect your psychology. Because in the next trade, you are asking yourself, what are they going to say if this trade does not go well? And then the other thing to avoid is to trade for people. Do not trade for people. If you are to trade for people, it must be clearly stated that you are not reliable for any outcome. Losses, you are not going to refund them. That's one of the most difficult things to ever go through. I personally faced this. You will be called a liar for saying you lost, even though there's evidence that you lost. They'll be like, you're not telling the truth. So do not trade for people. Even your own brother, the very close person, let them do it for themselves. They automatically place a demand of success on an unpredictable business. Worst part of it, no matter how much you explain the risk of trading, as long as the risk is not yet experienced, they are okay. The moment you lose, that's where enmity starts. Some of them, they're going to drag you to court. Some of them, they would even hire hitmen to come after you. You want to be careful and do not involve yourself with people, no matter how good they beg you. When things are bad, people change. They will show you that they're not your relative. They will show you that they're not your friend. That's human beings for you. So avoid inviting people into this business. Do it yourself, by yourself, for yourself. That's one thing that I learned the hardest way. It's part of the psychology. Because by default, it's only you who understands what went wrong. And it's also by default a demand of failure once you open a trade under pressure. We all have got dreams. We all want a house. We all want a car. We all want a wife. We all want this good life. It's best if it is you pressuring yourself than when it comes from a third person, third party, or a second person. If it is you, you can handle it. But when it comes from different people, it can even damage your own trading career because this one is calling every minute. This one is calling every minute. Avoid that. That's one thing that you must stay away from. No matter how tough things get on your side, don't trade for people. Trade for yourself. This won't affect your psychology because it's you and you alone. But when you involve yourself with people in a professional manner, there should be proper, do you know that there are people who can even override an agreement, even the terms that you stated with them, that there are losses involved in this thing? They're like, they don't care. All they want is their money. But as long as there was a win, everything is fine. You guys are friends. You are just a good guy. The moment things go wrong, enmity begins. It is instant. It's not like, no, it's instant. They turn. People turn. So you want to understand that involving people in this can be very, very, very deadly. Deadly to your mental health, deadly to your physical health, deadly to your psychology. You cannot trade when you are under pressure. You can't. You are going to be forced to make money even if the market is saying no trade today. So avoid that. Now, moving forward, I wouldn't say prop firms are overall bad, but I wouldn't say rely fully on prop firms because you never know what happens. The fact that they are making money out of sales, what if they don't sell? That's another question that you want to ask yourself as well. So you want to also break even, have some funds that you are running on a broker that you took from prop firm. I think the best you can do is to go to a prop firm to raise capital, and then you start to manage this capital via a live brokerage account. This keeps you at a safer position to make good income in life. So that's what I can say about prop firms, and this is exactly how far we can go. The risk management part of it, you have to understand that the prop firm business is just a risk management challenge. If you fail their risk parameters, it means you have already lost it. And then the last thing I would say, the power of patience. You see, I even wrote a song and sang a song that help me, Lord, with the spirit of patience. If you are a trader who is not patient, then you are not going to make any any progress in prop firm space. Prop firms require patience. You also have to be patient. You have to be patient with yourself, the support team of a prop firm. Be very, very patient and be willing to go through their rules fully until you have succeeded. That's how I do it myself. I'm a prop firm trader. I think my life has fully, totally changed because of prop firm, if I'm to be honest with you. And you can go to www.bonangfinance.co.za. There are payout displayed there. These payouts are literally out of my hard work, sleepless nights, waking up every day early in the morning just to execute and also study the prop firm behavior and how they operate. So I have made quite a good number of prop firm profits. At the same time, diversifying in 2026, I'm not looking into continuously being in a prop firm space only. I'm looking to then go into funding my own live accounts and trade my own rules as well. You understand? Particularly because the prop firm space industry could be getting tougher and tougher and tougher, especially with the consistency rules being introduced, this and that. These are new rules that are coming in, and they're coming in particularly because there are traders who can just make money in one trade and then they're done for the whole week, you know. So these are the rules that are coming in, and these rules can be tough because consistency rules, stop loss rules, this and that on a market that is likely going to be inconsistent could be very deadly and dangerous and toxic at the same time. Once you have engaged yourself in a prop firm space, make money, come out, stay in the live accounts and manage them properly there, and then you keep going. So patience is the highest paid skill in trading, not strategy, not indicators, but patience. Imagine two traders. Trader A takes 30 trades, trader B takes 5 high quality trades. Who wins? It's usually B, because the number of trades does not mean you are going to win. Usually trader B, the market pays trader B for accuracy, not activity. So it's not about the number of trades that you took, but the accuracy and the patience that you had waiting for your setup. So I wouldn't want you to approach prop firm like one shot equals success. You want to know that there are repeated failures, but you want to be always above these failures, right? There are failures that are going to literally come, but you want to be above and beyond them as well as a trader. So approach trading in such a way that you don't let one setback pull you back forever. So I remember very well, it should be this last month or so. Last month, I had no account at all. That week, I was going through a psychological effect. So when I showed one of my students that, you see, I don't have an account right now, they were very stressed. But the reason why I showed them, it's because I want them to also understand that there is going to be that time where you are down, you don't have an account. But we going to check now. I don't have an account. You are worried about me not having an account, but you don't have a payout. These are two different people talking, and these are two different people stressing. This one that is saying I don't have an account has no payout, and then this one who is saying, I like me, showing you that currently this is where I am now. I have got almost 50,000 in payout. This is payout. So comparing a guy with no account but with massive payouts, and then you with an account with no payout, these are two different entities and two different people. You understand? So you want to approach it like that, understanding very well what matters is the money coming your way, not the fact that you just can stay clinged into one account for the rest of your life. No, it's not one shot success. It's series and series and series of success. Well, be always above your losses. That's what I would want to let you know. Be always above your what? Your losses. I want to leave you with one final lesson. The market is not testing your strategy. The market is testing you. And then your patience your discipline, your emotional control, your consistency. But the biggest edge in trading is psychology. A disciplined trader with a simple strategy will outperform an emotional trader with the best strategy in the world. That's one of the most things that I would want you to understand, that if you can master patience, if you can master your emotions, then passing prop firm challenges becomes a byproduct of good trading. Focus on becoming a professional, the funding will follow. You understand? If you enjoyed this masterclass, leave a like, subscribe to the channel, and leave a comment below. And thank you so much for watching. The comment that you want to leave: discipline over emotions. All right, so we are going to break down the next video again, and we proceed just like that. Thank you. See you on the next one.